Morning, everybody. Welcome to Lending Lessons with Lori. We are continuing our series on Mortgage 101, but today we want to talk about the housing payment versus the mortgage payment. I believe those two terms are kind of used interchangeably, and I think they can be kind of confusing to new homeowners. So I want to break that down to you. When you're talking about your mortgage payment, this is specifically the amount that you pay to your lender. It's comprised of a couple of things, and we're going to break that down. That is principal, interest, taxes, and insurance. And depending upon the structure of your loan, whether you have 20% down or an FHA loan, there might be mortgage insurance as well built into that cost. Now, when we talk about the housing payment, this is different. You do not make your housing payment to your lender. The housing payment is what we refer to the front ratio in lending. And it is basically every part of the payment applicable to the home that you're purchasing as a percentage of your gross monthly income. So in this case, not only are we talking about the mortgage payment, but there might be applicable costs like HOA dues. HOA dues you do pay monthly, but rather than paying it to the lender, you're paying it to whatever servicing company manages the community in which you purchased in. So you pay that separately. So because of that, I do want to break this down to you in a little more detail. So I'm going to share my screen with you, and I'm going to cover this particular example. We closed recently. It's a condo that was priced at $255,990. Principal and interest in your payment are always expressed together, paid together. So in this case, it was $1,126.26 a month. The next part of her payment is the contents insurance. And I specifically want to say contents because she is not required to have a full homeowner's insurance policy. And we also call hazard insurance homeowner's insurance. Those are interchangeable terms. Now, the reason why she only has a contents policy is because if there were a catastrophic event on her home and it were to burn down, the rebuild in the roof is actually covered in the master policy, which is incorporated into her HOA dues. She pays out $200 monthly to that. So she is only responsible for replacement of like the flooring, the cabinets, repainting the walls, any appliances. So that is a much more affordable policy than a full homeowner's insurance policy. Then she also has real estate taxes of $138.66 a month. So keep in mind that $35 and $138 you're paying each month in your mortgage payment, that gets dropped into an escrow account so that your lender can pay out taxes and insurance on your behalf each year as they come due. Now, these two costs are subject to change. As your home appreciates in value, you should see that the cost to cover these will go up. Your home is reassessed every odd year for taxes, so she won't see a change in this tax amount until 2023. But your loan will go through an escrow review every year, and you will get a new statement that indicates whether there are any changes to these two costs and how it applies to the mortgage payment. Your payment will be adjusted to account for appreciation in those fees. Now, she does have mortgage insurance on her loan. This is not an FHA loan, it's conventional, but she had less than 20% down. So she is responsible for paying $54.72 a month. So these four costs here are all her mortgage payments. Now, $200 she is paying monthly to the HOA. So her total housing payment is $1,554.64. So just know that when you see your housing payment, this does not necessarily represent what you're going to pay to your lender. Now, I want to give you one more example. This way, we're going to a townhome of $720,000. So a much higher price point. So you can see that expressed in the fact that she is financing over $500,000. So her monthly principal and interest is $2,506.79. Now, her contents policy, hazard, she again needs a contents policy like the example above, is more expensive because we are dealing with more square footage here. So she's going to have, supplemental costs to cover the increased square footage. So hence it's a little more expensive. And of course, real estate taxes, higher price point, it's self-explanatory that that's going to be more expensive as well. So now her mortgage payment is these three items right here. She doesn't have mortgage insurance because she put 20% down, but she does have HOA dues of $255 a month. So really her total housing payment comes in just under $3,300 a month, but she will not pay that $255 to the mortgage. So just wanted to explain to you what that means in terms of housing payment versus mortgage payment. Know that they are not the same, because I do feel like they are used interchangeably, and you should understand that just because your housing payment is one thing, it's not necessarily what you will pay to your lender. So have any questions, please reach out to me. You can see my number there on the screen. I'd be happy to answer any questions. Stay tuned. We're probably going to talk a little more about escrow payments coming up in future videos. I want to give you a little more 101 mortgage for you. Thanks for listening today. See you soon.